So oil and gas is actually dipping, and of course Malaysia is linked to oil and gas, right? Our tax revenues, our GDP is linked to it. Exports, we are, if I'm not mistaken, 13 to 15% oil and gas related. This is petroleum, natural gas, things like that. Too busy to find stock ideas? Check out FIRL Pro to shortcut your research time and effort by 90%. Special 20% off link in the comments and description. Offer ends 30th of August. You can see here, it's now below 80, right? And of course, a lot of this is linked to what the US president is going to be doing. But before we go there, give us a lowdown.
Yes, so there's not really much of an excitement going around this oil and gas sector, especially what happened to Petronas and also Petros, which we're going to cover it later. But you can see that the energy, Bursa Energy Index, right? You can see that right now it is also pretty muted at the moment. And year to date is up 12%, which is pretty good. But then if you look at 1 month span, it actually went down a little bit. And we shall look at what's happening. So these are the few companies, or actually it's almost every single oil and gas company in Malaysia, thanks to the age for actually summarizing everything over here. You can see that most of the companies made money, or not made money, but most of the companies' share price are positive, except for you notice that over here we have the downstream side is down like 21% for PChem, 21% down for LC Titan, but majority is still up, especially for those maintenance business. So you can see that Delium over here is up 34%. And if I'm not mistaken, Yinsen also, this one I think is the biggest. Oh, no. Perdana Petroleum is the biggest, it's 112%. Yeah, it's pretty remarkable returns over here we have. And let's go to a little bit on the deep dive on this sector. Now, you can see that Perdana Petroleum, they reported great results. The earnings almost 5 times as compared to the preceding quarter, but then their share price dumped 22%. We'll look at it why later, but so far it seems like the market is anticipating something that's going to happen in the future. This is the same for Key Fuel also. Their profits are double preceding quarter, but then the market decided to, you don't deserve this. So they gave him another 40% down. Now, these are the 2 prospects that they have. So Perdana mentioned that, Petronas potential cutback on its capex because of this Petros, Petroleum Sarawak Berhad's takeover for their gas activity. It's going to be impacting on their spending on upstream capex. So that is one of the worry that most of these investors or the market is anticipating. They say that, because of this happening, so probably there will be lesser revenue for Perdana and basically most of the upstream players in the future. However, for Key Fuel, they actually reported quite a positive prospects, because you can see that they say the supply for offshore vessel is actually quite limited, and there's actually a shortage for vessels to support these activities. So what that means is that, and also they are expanding quite aggressively. So what this means that their business is doing well, but the market seems to be not rewarding them. I think it's also because it is like a domino effect. Like Petronas cut means most of these oil and gas company also cut.
Yeah, they're all linked, yeah.
Yep, exactly. So for those you guys didn't know, about 30% of Petronas earnings and revenue is going to go to Petros. So you can see that in financial year end 2022, actually there's another 2023, but they didn't include over here. But you can see that their profit, they are making about 111.62 million for financial year 2022, and revenue is about 375 billion revenue. 30% of this will actually go to Petros, so which means Petronas revenue and sales will be shrink by 30%. And majority of their capex is spent on upstream businesses. And this is very crucial, is because that's where all the upstream players are getting their contracts. And also you can see that they also spend some money, 5.7 billion in their gas business. So I assume, or we can safely assume that after this takeover, they don't need to spend on gas business as much as it was before, because Petros is going to be doing the spending instead. And Petronas also did mention that they want to to spend about 50 to 60 million in capex this year. However, because of this Petros takeover, probably it means that they may shave some of these
That's quite
capex
30%,
spending.
right?
Yeah, probably 30%.
Yeah. So like 30 to 35 is a more sensible figure.
yeah, exactly.
But again, this is on the assumption that it's just flat mathematics like that. Because I mean, I'm not sure if you know, but I don't. Capex requirements for natural gas and the usual petroleum. What are the differences?
Oh, this one I'm not too sure. But
we can assume, right? At least be conservative. 30%.
Yes, 30%. Yeah.
Or more.
Now, some of you guys maybe were asking, hey, would there be a dividend cut because 30% of the profit is going to be gone? But fortunately, Petronas have a huge cash pile inside their balance sheet. So I think so far, still okay. The dividend, maybe they will be giving out less dividend to the government.
Well, yes, but then what they get from Petros, assuming the East Malaysia side manages it well, would be tax revenues.
Yeah, exactly. So definitely will be impacted, but their cash probably can like weather this uncertainty for their dividend payout. Okay, so they did mention that these three value chain, which one will be impacted? So number one, upstream, they will be reducing their domestic drilling activities, offshore fabrication, hookup, all of those stuff will be impacted, especially for greenfield. Whereas for brownfield and maintenance activities, so your Delium, you got what? There's a latest IPO company, which is Steelhawk, those kind of companies.
Hibiscus, of course.
Yeah, Hibiscus. So probably those kind of companies will be less impacted. Whereas for midstream and downstream, those are not really much impacted, and downstream is not really applicable. So yeah.
This is assuming they cut the capex, right?
This is assuming the after the Petros. Yeah, correct.
Right.
Yeah. So majority is still upstream will be affected. Now, globally, we have also Trump 2024, assuming he gets elected. Trump is an oil guy, so he wants to increase the oil production in Malaysia. And in 2018...
you mean the US, not Malaysia?
Sorry, in the US, yeah. And in 2018, he also did mention that he wants OPEC and Russia to continue to increase the oil output so that they can crash the oil price. So that is his opinion. He's just an oil guy. He loves oil. And you can see that during Trump's era, the US crude oil production increased quite a lot. I think that's like a 30% jump. Then when Biden took over, that increase is only probably 10-15% only. It's very little. So assuming he comes back again, who knows, maybe we will see another sharp uptick in crude oil production. Now, however, you can see that OPEC did mention that they want to cut oil production. So you have Trump who wants to increase oil production, but then the OPEC guys, they say, you know what, we are going to cut production here and there. So in 2025, that's what they're going to be doing. And you can see that the production, crude oil for OPEC has been pretty flattish. There's not much of an increase. But then you can see that production actually start to tick up after 2020. So yeah, we shall see whether they'll continue to cut production or would they, listen to Trump's advice and boost up more production. Now, speaking of oil and, Malaysia, we are, our country relies a lot on this oil price and also our
not
oil
as much as people think, but we are still reliant to an extent,
Yes, exactly. And the reason why is because if you calculate the export versus import for oil, right, the export is just much more. So which means that it gives net exporter for oil. Some of you guys may be thinking that, hey, what about the E&E, the electrical and electronic segment? That one contributes about 30% of our GDP. Well, we also got import some of these semi-finished products, which is related to manufacturing. So net, it's actually quite small. And this is why our GDP actually follows the oil price and how much we actually export oil from our country. You can see that this line over here, the gray color, which is your crude oil price, and also the yellow color, which is our real GDP for Malaysia, it's almost similar. You can see that once it goes up, then they go up. Once it goes down, then they also go down. It also follows the volume in terms of their export for oil. So this means that our GDP growth is heavily relying on this oil price. So which means if there's strong oil price, strong export volume, which means our GDP growth will be stronger as well. So that explains why our 5.9% growth is thanks to oil. And manufacturing sector is less so. Just now I already explained, because the net import and export is actually making the manufacturing sector's contribution is actually very minuscule. So that means if, let's say, oil production start to increase a lot, more volume, which potentially means oil price to go down. So if oil price is weak, our GDP growth may be impacted. Okay, so that's about it. And the takeaway here is there's just too many uncertainties.
As usual.
Yeah. I mean, there's a lot of politics involved, so everything also can happen. Like, can suddenly Trump decided to, let's not increase production oil. Who knows, right? Maybe he suddenly woke up like that. So that's the uncertainty over there. Fund managers, they are also not really bullish. You can see they are not really investing. If you look at our video on Tuesday, fund managers are investing on banks instead. They're calling the year already, because they already make money, 20 to 40% a year. So they are just chilling right now. And now you may be thinking that there's a lot of these oil and gas companies are down or they are crashing already. So is it time to buy? What do you think, MJ?
Well, I think that the challenge. Okay, so the basic rule is that supply has been shrinking, and if you look at Petronas capex, you can look at all the data you want, but I think Petronas is a good proxy, right? It's about 50 billion 2022, due to drop a bit. But if you look at the previous years, like 30 plus, and then we know that in 2022 there was a bump up because of it's just a newer capex cycle that they have to fix older products. But if you look at 2013, 2014, it was a lot higher, right? Closer to 60, 70.
Yes, correct.
So all of this is a proof that supply is shrinking, because if you want to have more production, you will spend more, right? So this is not just a Petronas thing, it's a global thing. And in theory, if the supply is constrained or is quite fixed, then because the demand for oil always goes up, or energy you can use, then again, demand supply, right? The prices of oil should go up. That is my long-term thesis, but there's a lot of perception that is being involved as well, because the share price, not just the oil price, but the share price of these companies that are in oil and gas also dependent on the perception and sentiment that people have. And the perception is that, with electric vehicles, general environmentalism,
green energy,
climate change things, green energy, oil and gas is a thing of the past. So it's a battle of fundamentals and perception now. And of course, perception usually wins in the short run, and even medium run. But I think in this case, it might be the perception part might be a lot more effective, simply because many people in the world believe it. China is too reliant on oil and gas, so that's why they are going very green with solar and all that, and then they fix the environment. The West, obviously. So if the West and China agrees on one thing, then that's how things are going to go, right? Rightly or wrongly. So I'm not personally I'm bullish on the long-term projection of oil and gas, but I'm not bullish on specific investments right now on the medium term. The reason is because I think A, there are better opportunities, and B, I may have to wait very long before I see oil and gas start to move. And I'm a fan of my favorite stock on the oil and gas is Hibiscus, then maybe followed by Delium, which has done quite well. But even these companies, I may have to wait for a long time before they start climbing to the levels that I would like them to climb to.
Yes. So that kind of answers some of you guys who are looking to buy for oil and gas, or who is interested in this industry. Hopefully you guys learned a lot from today's video. And before you guys go, make sure to check out FIRL Pro, because we're going to be giving off 20%
for 2-year anniversary.
For 2-year anniversary. I think you have one more day to take action, because this offer is going to be ending on the 30th of August, which is tomorrow midnight, once this video is out. And so you can check out what is FIRL Pro. Is basically where we write our best idea in a form of write-ups, where we analyze companies on their business, their management, valuation risk, all of those kind of stuff. We put it inside our write-ups, and it's a very simple to read write-ups. It's not a complicated report. You can just spend like 10 to 15 minutes and you can learn about the company. I think it will cut short like 90% of your time on knowing about this company.
Of course, in the 2 years, the portfolio has grown by almost 60%. Portfolio of companies based on our write-ups. The management notes have went from 0 to 263. Management notes are notes that we take when we have private meetings with management. So these are interesting insights that you don't really get just by reading the annual report or the newspapers.
Yes.
And then you also have reports that have helped our clients make money, right? In the first year, it was only one company that was, there were no companies that were 100%, if I'm not mistaken.
Yeah.
And then in the second year, we had 3 companies that grew more than 100%. One of them almost hit 200%. So we're still early days, 2 years. We intend to run this for a very, very long time. And so, of course, the prices may not be different in a few years' time. But today you have a 20% off, which will end tomorrow when you're watching this. So this will be Friday. Friday, you will that's when the cutoff will be. So hope to see you in the program. But if not, thanks for always supporting us. And if you want to get a taste of what these write-ups look like, just check out our free sample. But yeah, any last words?
No, that's about it. See you guys next week.
Bye-bye.